let me go ahead and get started. I want to thank you for attending our webinar here today. As each of you may know, we have been providing a webinar to our brokers, to our benefit broker partners for the last 7 or 8 years here now on the first Wednesday of each month. And over the last 5 years, the Affordable Care Act has provided a tremendous amount of guidance, regulations, requirements, obligations, you name it, agita, whatever you want to call it. It's created a lot. And over these last several weeks, this new deadline, this ACA reporting deadline, has created even more kind of tension, confusion, and questions. And what we thought we would do here today for you is compile this kind of common, frequently asked questions that we have received not only from our clients and possibly prospects, but also from you. I mean, we are talking to you all the time, and we are always, learning and providing direction, a lot back to you guys. So we're hearing a lot of questions. And so what we thought we'd focus on in today's webinar was really focused on those top questions, those top areas of confusion, because as I've said before, you as a benefits broker, you truly are the most trusted ACA advisor to your clients. You are going to be looked at more than any other advisor relationship, and for that, it's an awesome position to be in. So today, we're going to be focusing in on those key FAQs. But before we get started, let me just introduce myself. My name is Steve Jackson. I'm the Senior Vice President of Strategic Development and Channel Sales, and we've been fortunate to have worked with many of you over these many years, and we're thrilled to have you on today because, really here at the beginning of October, and certainly it even started a little sooner than October, but we're now well into our renewal, our top-selling season, all of us. And so I know you're busy. You've got a lot of other opportunities and appointments that are available, so I'm thrilled that you took the time here today to sit with us. As far as the logistics, we will be recording this webinar here today. So that link will be provided on our public YouTube channel. So look for Broker Concierge on YouTube, and you can access actually, a lot of the webinars that we've done even over the last few years actually. So that information is there at your disposal. Usually it takes a couple days to get this particular presentation loaded on that site, but we will be providing a follow-up email to that. Also, for our Broker Concierge partners, we will be providing a copy of the slide deck presentation for your review and use. And depending on the questions, we do covet your questions. So as many of you have, you found the question box. Go ahead and type in your question along the way. If we have a sufficient number of questions, we can go ahead and turn those around in an FAQ and then deliver that back to all of our Broker Concierge partners. Okay, so if there's enough of those, we'll put that together for you if we find that it's beneficial to you overall. So let's go ahead and get started. As I was thinking about, as many of you know that have participated in these webinars, I change up our presentation all the time, based on seasons, the time of the year, and so forth. So yeah, okay, October. Leaves, right? I mean, change is in the air, so I had to put the leaves in there. And I was trying to think of this kind of analogy, thinking about your employers and thinking about all the trees that must be on their property and leaves that may fall, right? And there's going to be a bunch of piles of leaves, and think of those piles as obligations. Many of those employers are hoping that it's just a pile of leaves, whereas many clients might be uncovering leaves and uncovering obligations that I didn't even know may exist. So as you see here with this particular slide, it kind of uncovers the ACA compliance. It uncovers additional obligations of ACA. And what we found here over the last several weeks and even months is that employers may not even be aware of their specific obligation for 2015, let alone 2016. And I think that it's very much up to you, and certainly us, but it's certainly up to you to really discuss the various requirements and obligations and ensure that your clients are fulfilling this obligation. What I would ask you to do, based on our, actually quite a bit, numerous conversations, that you need to ask some specific questions to your clients to ensure that they are fulfilling these obligations. So today we've got a few pieces of agenda that I think you'll find very helpful. These are all centered around ACA reporting, okay? So we've tied this all in. And so what I'd like to do here just initially is update you on the final instruction language in what they have used now for HRAs. So I want to give you an update on how the reporting requirements will apply to HRAs. So the answer or the statement there was will, okay, but now on a very limited kind of a basis. So woohoo, we are thrilled with the language here thus far. I am then going to talk about commonly controlled groups. I think, when you think about your clients, you may have a client that you've worked with for years or brand new, right? And they have 30 employees. But have you asked the question, potentially, hey, do you have other affiliated companies? Are you part of a commonly controlled group? It'll be very important that you understand how a commonly controlled group needs to follow the requirement of the ACA reporting requirements. So we're going to touch on how a commonly controlled group is going to come in the mix. Also, multi-employer plans, or even MEWAs, those welfare arrangements, how does the reporting requirements apply to these types of organizations? A key question that has arisen as we talk with clients day in and day out has been around measurement periods and defining, well, what length of measurement period is right for me? Is right for this company versus our other affiliated entity that we own. This is valuable information for you. You as the benefits broker are going to provide huge insight to that. Tracking, the variable hour employee tracking is probably the most arduous or the most time-consuming aspect of the reporting requirements. You could have many applicable large employers where it doesn't apply as much because they don't have a lot of variable hour employees, but then you could go to the extreme where you've got 20 new hires every month, where that it applies. So being able to assist your clients through this process of variable hour employee tracking, very important. We'll touch on really the high notes of that particular requirement. And then lastly, we get a lot of questions in relation to, so should I be using a B form or a C form? Okay, here's who I am. Now, which one should I be using? So I want to just maybe quickly kind of just touch on, here's the ramifications of who will use which forms. All right, so good stuff. Let's go ahead and get started here with that. One of the first things that I want to tackle is how HRAs were addressed in the final instructions for forms 1094 and 1095 here in the middle of September. So in our last webinar in early September, we spoke about the draft instructions, and within the draft instructions, they very clearly pointed to the fact that an HRA would now be considered a reportable item or a reportable plan. For employers, not just the major medical plan, okay, or self-insured plan, but now an HRA would be included. So we kind of covered in detail that information last month. Well, as with most regulations, we need to do some clarification. So within the final instructions, they did remove they removed an integrated HRA from the ACA reporting requirements, okay? But there is an additional type of HRA that is reportable, and I do want to have you make note of that here today. So for an integrated, let's just make sure we understand an integrated HRA and what this means, because we've come across this situation here already, and employers are going to need to make some changes. So here's the rules in regard to an integrated HRA. The employer must offer a group health plan that provides minimum value. Okay, so the employer must offer a group health plan that provides minimum value. So it's a plan that is ACA compliant. okay? And then these 2 bullet points, although they may say the same thing, I do it for clarification. The employees receiving the HRA must be enrolled in the group health plan, okay? So you cannot have an employee that waives that medical plan, period, but then somehow receives that HRA. That would not be considered an integrated HRA in that particular example. So the HRA is only available to those that enroll in that group health plan coverage, okay? So very important, those 2 pieces, very key. So what I decided to do was just break down this integrated HRA. What does that mean for a fully insured plan offering, and what does this mean for a self-funded plan offering, okay? So these are very consistent, okay? There's a lot of words here on these, but they're all very consistent, and it's this. So for an applicable large employer, that's ALE, that offers a fully insured plan, they're not required now to report HRA coverage on Part 3 of Form 1095-C. You recall that for an ALE that is offering fully insured coverage, the carrier that's offering that coverage will report the coverage information on Form 1095-B, okay, as in boy. All right, so the employer would not need to complete Part 3. Well, again, clarification of the final instructions state that the HRA would not be reportable there. Under a non-ALE or a small employer, there's no additional HRA reporting requirement on Form 1095-B. Now, the self-funded, again, very much the same for integrated HRA. Just really doing this for emphasis so that it's clear, for you. But as an applicable large employer that is offering self-funded medical plan offering, they're going to report coverage on Part 3 for the self-funded coverage, okay? But they're not going to need to report specifically on HRA coverage, all right? So under the non-ALEs, if you're not required to report HRA coverage on Form 1095-B. Now, as a small employer, a non-ALE that offers a self-funded medical plan, you guys are all correct, in stating that, that employer is required to provide that coverage information on the medical plan on 1095-B. But in the instance of the final instructions for an HRA purpose, that HRA specifically in an integrated HRA setting is not going to be reportable, okay? Now, one of you that I see as a question is really paying attention, and that is fantastic. And I'm going to read this question actually before I do my next little piece. What if the employee is enrolled in the spouse's group health plan? Would that be considered an integrated HRA? Thank you, Katrina. All right, so there is one instance in which an HRA would be considered a reportable item. Okay, so the HRA integration can occur with another employer group health plan. We did a webinar on this here, it's probably some time ago, in relation to establishing an HRA that will reimburse expenses, deductible expenses and so forth, of another group or another employer's group health plan, okay? So first off, the employer that has such an HRA offering would need to state within their documents that they permit that employee to waive coverage on their group health plan only to enroll in their spouse's group health plan, okay? So that wording, that language needs to be put within that HRA document. But let's say that that is in the document, okay? So in this case where you have employer A that is offering a group health plan and an HRA, but that employee of employer A does not select, they waive the group health plan of employer A. They instead choose their spouse's plan under employer B, all right? So what would happen in a fully insured plan, so as you look now at the slides, for a fully insured plan, the applicable large employer is required to report the HRA coverage for those eligible individuals, okay, so that employee that I just mentioned, on Part 3 of Form 1095-C. Now remember, fully insured, the carrier is doing the coverage information on the medical plan, but for this HRA with another employer group health plan, they would have to provide the information of the HRA coverage under Part 3, Form 1095-C, but only on those individuals that would have that HRA coverage, okay? So if they are an applicable large employer, 1095-C. If they're non-ALE, they would be required to report HRA coverage for eligible individuals on 1095-B. Okay. Now the information, I'll go into further detail as far as coverage information for both of those forms, 1095-B and 1095-C, but they are required to report that HRA coverage for those eligible individuals on 95-B. Now, on the self-funded plan, it's pretty much the same. Okay, this is just a duplicate here of what I stated above. As you know, for self-funded, the applicable large employer and the non-ALE will need to report on 1095-C and 1095-B respectively, okay? But now, for those employees that declined that coverage, okay, they declined that employer's plan and went on their spouse's plan, so employer B here, they're going to report those individuals and those individuals on that HRA coverage, okay, for each. So very important. Is that going to be a lot? Is that pervasive? Are there a lot of employers that have that type of HRA coverage? No, no, we do not see it in any way as an enormous kind of use out there or frequency with employers. However, as ACA has come on, employers have looked at different strategies and may have absolutely incorporated this language within their HRAs. So something very important for each employer of yours that has an HRA, you need to ask the question, do you allow an individual to waive coverage but utilize this HRA with another group health plan? Okay, so very important to ask that question. So I wanted to update then kind of my chart in relation to reporting entities. So as we look at who is considered a reporting entity or what plans might drive a reporting entity or a reporting requirement, I wanted to just show you kind of what that has changed or if it has changed based on the final instructions. So clearly for an applicable large employer, whether they offer coverage, whether it's fully insured or self-funded, or they do not offer any insurance whatsoever, for an applicable large employer, they're going to be required to report on 1094 and 1095-C. For the HRA, it is now the questionable item. It is there possibly if the employer has incorporated that language into their HRA. Clearly, under the additional reporting requirements, irregardless of a dental plan, a vision plan, a health FSA, there's no specific reporting requirement for that at all. Now, on the small employer, really the only firm time that a small employer or a non-ALE will be required to report is with self-funded coverage. So whether they have fully insured coverage or no coverage, they're not reporting. So self-insured medical coverage, they will report, all right? And now that HRA, if that small employer has an HRA, that does allow for that additional language of reimbursing another employer's group health plan and those expenses, that could be incorporated, or that coverage information could be incorporated as part of that plan. And also, just for clarification, you know, a dental plan, a vision plan, a health FSA is not creating a reporting requirement, okay? So hopefully that visual helps. You know, we're primarily looking at self-funded groups for small non-ALEs, and then for really any type of medical coverage or no medical coverage whatsoever, the large employer is going to need to report. And so hopefully that HRA information was helpful in just kind of understanding what is required here ongoing. This next topic here was actually very much a surprise to me. I'm going to be honest. You know, when we speak with many of our clients, we have a lot of small clients, large clients. You know, there are a lot of entities out there in this world that there's a lot of common ownership and control with other affiliated companies. We do see it quite often, but I guess I didn't realize how many employers it's going to affect. And so this question here, this topic, has been one of probably our most talked about topics in regard to how commonly controlled groups are expected to fulfill these specific ACA reporting requirements. And so what I thought it important to do here out of the gate is to really define a commonly controlled group. We do get that question a lot, and PrimePay, here's the disclaimer, PrimePay is not acting as a tax advisor or legal advisor, certainly for you or for your clients, and so we can't necessarily provide recommendations. We basically want to push the answer to this question ultimately to their tax advisor or to their legal team, right, to determine status. But let's put some strong language here directly from the IRS in regard to what a controlled group is and what this means, okay? And this is straight from the IRS. They define a controlled group as a combination of two or more corporations that are under common control within the meaning of Section 1563A. Now, I didn't print that entirely here, but think some common sense in regard to a common control, that owners that have a common control over other entities. Okay, so that's a very broad definition that I just listed. Now, I made the next bullet because I wanted to. I'll stress it again. But all employees that are a part of a controlled group must be considered to determine their ALE status. Now, there could be some seasonal employees, okay, employees that are within a measurement period that may not be counted. Okay, don't get me wrong. There could be a few exclusions, but generally speaking, all employees need to be considered to determine that ALE status. Very important. So a commonly controlled group, though, let's take this just a little bit further, is generally broken up into two scenarios or a combination of these two scenarios. And the first is a parent subsidiary type of a controlled group. This one is one or more chains of corporations connected through stock ownership with a common parent corporation. And 80% of the stock of each corporation is owned by one or more corporations, and the parent must own 80% of at least one other corporation. Okay, so from shareholder agreements, stockholder agreements, and so forth, this one has a lot of clarity to it, but may not be as, I guess, in the realm of clients that we see day in and day out. This may not be a type that we see day in and day out. We will. But I would say one that we would actually have more familiarity with, we see on a regular basis, at least I do, so I guess I'll just say I'll speak to myself, is kind of the brother-sister commonly controlled group. And that's a group of two or more corporations in which 5 or fewer common owners own directly or indirectly a controlling interest of each group and have effective control. And the IRS has defined effective control as generally more than 50% of the stock of each corporation. So it's kind of that, do these owners that own 2 or more corporations, do they have a majority ownership, that controlling ownership in those other corporations? Okay, even in a majority control, they may not have daily involvement, right? But if they have that control, that effective control, then that would be considered a commonly controlled group. Okay, so very important as you're talking with your clients to determine not whether they're necessarily parent or subsidiary, brother, sister, or a mix of the two, but really determine if there's other affiliated entities that could actually be a part of the ACA requirements for this group, okay? So what I thought I would do is just provide an example here, if I may. I've put together a company here, created this company overnight. It's doing extremely well. It's called Coffee for Us Cafe, all right? The corporate office is somewhere. They've got about 15 employees. But then they also have 3 other entities. They are controlling group in a manufacturing plant to make the coffee, right? They have to, or to package it and so forth. They have a distribution center that they own. It's got its own separate EIN. They also own a sales and marketing firm that helps get and distribute additional sales for their business. And then we also own a couple other, Coffee for Us locations in the Northwest and the Midwest. And each of these, there's 6 different EINs, federal EINs here for this one particular company. But as you look at this, each one of these companies or entities just have a few employees, right? So the manufacturing plant's got 20 employees, but you combine this, you combine them as a controlled group, and this employer has 65 full-time employees. So each separate company, all right, is subject. So based on that analysis, each separate company is subject to the employer mandate. That's the distribution center that's sitting there with 10 employees, or the sales and marketing firm that only has 5 employees. Each one of them, now that they are a part of a controlled group and defined as such, must be counted and actually thought of then as the whole. So as a whole, as a controlled group, they have 65 full-time equivalents. So each separate company is subject to the employer mandate. The penalties are derived separately for each employer. Okay, so it is important that the distribution center recognize themselves as an applicable large employer and perform the functions of that company to ensure, if they wish, to avoid any penalties that could be assessed by either not offering coverage or not offering affordable coverage. Okay. Also, they're going to be required to report under 1094 and 1095C instead of 1094 and 1095B. Why? Because they are considered an ALE, an applicable large employer. So I wanted to just touch on some standard reporting action items that I think you would find helpful. And so, the first thing is they need to determine their ALE status in the previous year. So that controlled group should be looking at their FTE calculations in 2015 to determine that status, where they're going to sit in 2016. Okay, so determine that status right now. And you want to basically look at, you can look at your FTE counts for all year and find that average for the full 12 months. If they are considered an ALE, each entity, each affiliated entity, needs to offer qualifying coverage. So kind of the standard definition, you need to offer it to 95% of your full-time employees, offer minimum value coverage, affordable coverage to employees and dependents, that kind of definition. So qualifying coverage. This also means that if those smaller entities, the sales and marketing firm, the distribution, the manufacturing plant, if they have variable hour employees, they're going to need to monitor those variable hour employees through those various measurement periods to determine lookbacks and whether those specific individuals will need coverage or not. And then, as I mentioned, the 1094C and the 1095C would be used within these employers to determine that status. Now, I get a common question, which is a good one, in regard to, well, okay, so that means on the 1094C, one of those entities needs to determine whether they are the authoritative transmittal. And the answer is yes, absolutely. They need to, one of the entities needs to determine that. And so then they will list all the other ALE members on 1094C. Now, I showed you here, I just have a couple pictures in regard to the 1094C form and just where they would actually put that information on lines, basically 19, 20, 21, okay? I get the question, though, can a authoritative transmittal file on behalf of the other ALE members? And the answer is yes. That does not remove the liability of each of those, other, in my example, those 5 other entities that fall under that controlled group for Coffee for Us. But the authoritative transmittal could. Now, you have to file a 1094C, though, for each individual entity. So it's not as if there's this one return per se that would be used. So the authoritative transmittal could file on behalf of the other members, and they would file it separately, okay, for each particular EIN that they would have. So very important. Controlled groups, it has popped up tremendously, and I'm sure it is going to come up quite frequently here for you as well, at least with your questions. We do and have run across quite a bit just additional opportunities, and that's involving multiple employer welfare arrangements. And so I thought I would at least, and also multi-employer plans. And how does ACA reporting affect those employers that are part of a MEWA, okay? Excuse me. Or possibly a multi-employer plan like a union, non-union plan, okay, or as an example, such as that. So In a MEWA, a multiple employer welfare arrangement means that an employee welfare benefit plan which is established or maintained for the purpose of offering or providing any benefit to the employees of two or more employers, okay? So I just read for you the basic definition there in regard to a MEWA. But a lot of times you think about a MEWA, you know, there's common types of maybe association type plans. There's employers that are very similar to one another that are all part of this particular organization that is providing some special benefits, what have you, to those members. Generally speaking, these employers are not commonly controlled groups. These are separate employers, EINs, okay, that we're talking about here in this particular instance. So let's just look here first at fully insured plans. So if we have a MEWA, so you know, a multi-employer welfare arrangement, and that particular arrangement utilizes a fully insured plan. Now, to some degree, the MEWA could be a part, or the health plan could be run by a trust, okay? It could be managed and administered, owned by a trust. So the trust is the carrier, if you will. Not necessarily, but it could be a relationship such as that. So let's just talk about the employer, though, okay? What does the employer need to do in a MEWA situation? What has to be done? So the employer in a MEWA, think of this as really, you know, the employer is going to do what they need to do, you know, irregardless of them being in a MEWA or outside of a MEWA. The employer is going to complete forms 1094 and forms 1095C. Under 1095C for a fully insured plan, again, the employer will not need to complete Part 3 of that. They're going to report the offer of coverage and the 4980H Safe Harbor Code information on line 16. They're clearly going to provide the forms to all their full-time employees or those that are eligible certainly for coverage. If they were a part of a controlled group, the authoritative, the entity, the employer that is providing the authoritative transmittal, you know, they could or may report for all employers in their group, but just keep in mind each employer is liable for that reporting. So what we're hearing, I'm not necessarily saying I'm seeing because we haven't done it yet, right? But I'm seeing that most employers will probably want to do their individual reporting just to ensure that that obligation is being fulfilled. For self-funded plans, you see something pretty similar. Again, employers are going to need to perform the duties under ACA reporting just like if they were outside of a MEWA here to some degree. The employer is going to complete forms 1094C, but now complete all of 1095C, okay? So even the Part 3 of 1095C, they're going to report on all employees who received the offer of coverage, okay? So they're going to list all of those spouse or dependents who are covered under the plan. They're going to provide the forms to all full-time employees. And again, the same thing, if they were part of a commonly controlled group, the authoritative transmittal may report for all employers, okay? So in a MEWA situation, generally speaking, okay, it actually looks very similar to what an employer would look like outside of a MEWA, okay? So don't be completely confused, you know, in consideration of an employer that's part of a MEWA. You know, their obligations are still pretty sound. You also, though, have multi-employer plans, and this has been further clarified in the final instructions of 1094, 1095, and this a particular transitional relief has been established actually for employers who fit this designation. You absolutely will have employers that are part of multi-employer plans, whether it's through a union or a non-union relationship. That's really like one of the best examples to certainly provide. Let's look at that example a second, because in a union plan, the plan itself might own it, might administer it, might process claims. You know, it is run by the union, okay, right? And the employer themselves, due to HIPAA and other reasons, may not have the information of who is covered or who is not covered, okay? However, the employer still has the responsibility for reporting employees not covered under the union plan, but also those covered under the union plan, all right? So don't mistake, this transition relief, which I'll share in a moment, but the employer is responsible for reporting on those are employees of that employer. Okay, so there is transition relief, as I had mentioned. What the transition relief has provided for these employers that may not have that information on those union employees, they basically have said that the employer does not have to worry about offer of coverage or eligibility, okay, for those union employees. Excuse me, and they would enter, excuse me, on line 14, they're going to enter code 1H, which is no offer of coverage, and then use code 2E, which is just the multi-employer relief on line 16 of 1095C. So the final instructions really confirm that 2E is the proper code, and so it does provide some much needed relief because employers were trying to figure out, well, how are they going to get this information so that they can actually report it, right, to, on these forms and ultimately to the IRS. The next particular item is on measurement period analysis, and this is an awesome opportunity for you as a benefits broker to get really involved. We hear a lot from our clients about them trying to understand or to figure out or to determine what types of lengths of measurement periods should they be using, okay? How should they be applying it, and so on and so forth. And so you sit in a very good position to determine that. So I wanted to lay just some additional education components that will help assist you in communicating this to your clients. Now, PrimePay is sitting in a position to help our clients. We, as you know or may know, we offer a reporting solution for our clients, and we need to be able to assist them through definitions and understanding what the initial measurement period is, what it pertains to, the lengths, and so forth. However, when it comes to making recommendations, we point those types of questions back to you, the benefits broker, because you really are sitting in the best position to do that. So let's first just look at measurement period analytics. And that upper box to the left, what I want you to just continually to focus on is, we're thinking, as we think about variable hour employees, those are the ones that we need to measure. We don't necessarily need to measure those that are truly considered part-time. They're going to just work 5 hours a week and so forth. But we're going to have employees that are clearly labeled as variable hour employees, and those need to be measured. And we need to ensure that if those variable hour employees are tracked through a specific measurement period, and if they work 30 or more on average, 30 more hours on average per week, or 130 hours or more each month, that at the end of that measurement period, they would be deemed eligible for coverage. And as an employer, to avoid any penalties, you would offer that coverage. So just to get some clarity on the analytics, the first one is the initial measurement period. So this is good information for you. I figured as a good one page that you could literally print out and use in your communication efforts. The initial measurement period is based, generally speaking, on the date of hire. That's when it starts, rather. It's the date of hire of the new variable hour employee. The length of period can be between 3 to 12 months, okay? As an employer, they can choose. How long? Do they want it 3 months to 12? This, again, just as for a point of emphasis, you're not necessarily tracking a part-time employee who has a fixed weekly component of 10 hours a week. Okay, that's not considered variable. They're at a fixed part-time rate. But all of those that are variable are what you would consider as measurable. The standard measurement period, this is for all current or ongoing variable hour employees. Those employees that have gotten through that initial measurement period, stability period of, when they were first hired. So this, again, is from 3 to 12 months. This will start and stop. So the date of a standard measurement period is fixed, and it will start and stop on a particular date each and every year. Okay, and I'll give you an example here in just a bit. The administrative period is up to 90 days. Okay, so it can be a maximum of 90 days. It is that period of time to evaluate the eligibility of those variable hour employees. You know, it gives the HR team, department just some time to evaluate the information that was, what the results were of those periods, so that they could appropriately offer or not offer coverage to those individuals. And lastly, you know, through the stability period, an employer is to maintain that coverage, whatever that coverage is, regardless of the hours that that variable hour employee works during that stability period. That employer is to just maintain that coverage, okay, during that time. Kind of the status quo is achieved. That stability period is a minimum of 6 months, but no shorter than the standard measurement period, but can be a maximum of 12 months. And this generally begins on the health plan year, okay? So let's just look at this. Let's move from analytics to application, okay? Let's take our Coffee for Us Cafe. Their health plan begins January 1st. It's a calendar year. You know, we've got 6 locations, and I only state that as 6 locations to just reinforce that you could have different lengths of measurement periods for each location. You can vary that by location. For the sales and marketing firm of Coffee for Us Cafe, you might want a shorter time period based on the type of employees that you hire for that particular organization. But for the manufacturing plant, maybe they want a longer duration because there's some higher turnover, there, you know, different situations that may apply. So those lengths can be varied in regard to the location. So we're first going to start, you're going to see that I'm going to start from the stability period here now, okay? The stability period is, as I had stated, it's going to start on the health plan year. Now, in this particular example, we chose, in the standard measurement period, I chose 12 months. So it's showing a minimum of 12 months here right now. But the stability period would run from January through December, just like the health plan. Okay. For the initial measurement period, that has a minimum of 12 months as well, because I selected 12 months on the initial measurement period. And so that will vary, right, as far as when that stability period starts and stops, because that's all based on the new hire when they start employment at that company. The administrative period is 60 days. So if we start backing into some numbers from the stability period, that would mean 60 days prior to January 1. So from November 1st through 12/31, we've got 60 days here for the employer to kind of go through their open enrollment period for their ongoing employees. And then the initial measurement period, administrative period, is 30 days in this example. I had mentioned that the standard measurement period then is 12 months. So that means that the start date for tracking for Coffee for Us Cafe for their variable hour employees should have begun as of November 1st, 2014 and flows through October 31st of this year. So you see that those employers that have a calendar year here in 2016, that the tracking of these employees should have already begun. They should be well into the tracking mechanism for their ongoing employees and also their initial new hired employees as well. So in my application here, example, we selected 12 months for the initial measurement period. And again, that's going to start and end, excuse me, on multiple dates throughout the year based on the number of new hires that the employer would choose. So as you look at this, you don't, excuse me, you can't go into just further detail, example upon example, but I thought this would be helpful as you're talking more with your clients to assist them in kind of figuring out what their length of period should be. You know, if they have very high turnover, they might want a longer period, right? If they have a shorter term, it all depends. It all depends what time of year that their plan year may be renewing, that they might want to establish different dates to capture data in a time period that's more not seasonal versus seasonal, okay, and how they might structure their measurements of their variable hour employees. So hopefully that's helpful for you. The data requirements for employee tracking. I thought it would be very helpful to at least get a greater capture of some of the data that is needed, you are sitting in a very good spot in assisting employers with the data requirements, certainly on the coverage side. But let's kind of bring up what some of the additional requirements are, where they can be found, and so forth. So as we think about payroll, there are actually two major components to the data requirements. There's a tremendous amount of payroll data, right? So when you look at this, pretty basic stuff, but name of employee, social, address, date of birth, the hire date, the termination date generally is found in payroll. We get a full idea of what the full-time employee count would be, or the total employee count would be, based on full-time equivalents, because we have the hours that are worked. But also, very importantly, is the rate of pay and the pay frequency. Okay, you need to track these variable hour employees through their various pay periods and through each month. What are the hours? Information is found all within payroll. I mean, I would basically surmise that probably 50 to 60% of the data requirement need for these forms are found in payroll. Okay, and so is this something that if you're working with a partner such as PrimePay and your client is a current payroll client of PrimePay, are you going to need to worry about these items right here? Nope, not at all, because our solution will push that data automatically from payroll directly into the ACA reporting solution. But we also have a standalone solution, and so as an employer, they're going to need to capture this information to be then loaded into that platform. So very good information to know, but this is a lot of great basic information that's found directly within payroll. So I also want you to think about coverage information. What information do you hold currently? Does a carrier have it? Does a TPA have it? Does your employer just store that information on an HR management system or an Excel spreadsheet or whatever it may be? So here's some things, additional items that will be needed on these forms. It's going to include the coverage offered. We need to know who is eligible and enrolled. We need to know who waived, clearly enrolled. We need to know of status changes, because on the form, we need to know when to add a dependent. If a dependent was added in the middle of the calendar year, they might have had a child, a newborn baby, here in August. So we would not reflect that dependent who had coverage during that time up through July. But as of August, we're now including that information. So the employer is going to need to have strong information and indication as to when those status events occurred in regard to the coverage that was offered and how they were enrolled. Something that's a little more easily certainly ascertained, but is the employee share of the lowest cost monthly premium, so that employee contribution. But we're only talking about self-only coverage. We're not talking about what that employee actually elected, but only that self-only coverage. And then the names of the covered individuals, and we're going to need the Social Security number. If a Social Security number is not available, we can use the date of birth, okay, on those forms. Payroll is not going to, generally speaking, but not going to hold or house that additional bits of information on coverage, certainly with covered individuals. Just going back to the employee share, the lowest cost monthly premium, many of you have asked, well, I mean, doesn't payroll have the payroll deductions? I mean, you guys have the employee share of that medical plan, and that's true, but we're not often gathering the information in regard to this is if you've got multiple plans. If it's one plan, yes, maybe it's true, we could send that data through payroll. But if that employer does offer multiple types of plans to their employees, we may not have the right information. Actually, there are several instances where an employer combines other medical plans because it's under Section 125, so it's all pre-tax, and they're combining it under one payroll deduction. So the information in payroll cannot necessarily be trusted to be accurate in regard to ACA reporting. So it will be up to you and the employer in determining what that employee share of the lowest cost monthly premium would be. Very, very important information. Hopefully that was actually helpful in kind of determining, hey, this is what I can get. This is what I can achieve as a value add for my clients. B forms versus C forms. There is definitely some confusion that abounds with this, so clarification is needed in regard to which forms may be used. So again, just try to put together a cheat sheet of sorts here for you that you can use to easily determine which forms may or may not be used. So as we look at the first one, it's the B forms, okay? So it's the 1094, 1095B forms, all right? So generally, this is going to be furnished by fully insured carriers, okay, showing coverage provided. So in a applicable large employer basis, the applicable large employer will absolutely create and furnish the 1094 and 1095C forms, but they're not going to show the coverage. They will need to, the carrier then, so I'm sorry, the applicable large employer is going to furnish that to their employees, and the employee is going to receive a 1095B from the carrier, okay? So the fully insured carrier under an ALE status, the carrier is going to provide that coverage. Also, though, it's furnished by self-funded, non-applicable large employers showing the coverage provided. So for a self-funded plan for a small employer, that small employer is going to utilize and file under 1094B and then furnish statements to the employees for coverage information under 1095B. Now, I put also in here, just thinking about the B form. So what is needed for coverage information for the B forms? All right, it's much more narrow. There's not as much information that is needed other than basic employer, insurer, employee information, basic information. But for coverage information, this is all that's needed. It's the name, the social, or the date of birth if the social is not available, and the months of coverage. Okay, so it's not totally just going to take a tremendous amount of time, but there's a lot of information here for a small employer that needs to report that you can really help tremendously with. Okay, so for covered individuals, really that's the key information. Okay, other than the basic information for that employee. C forms, a little different, okay? Every applicable large employer, whether providing coverage or not, is going to be required to file and furnish a C form. So it's furnished by applicable large employers showing coverage or no coverage provided at all. They're going to complete those forms. Self-funded ALEs will complete the Part 3 of 1095C, so that's that coverage information. But as I stated before, fully insured carriers will provide coverage on the 1095B. So again, in this instance, the employee will receive two forms. Form 1095B and 1095C for a fully insured carrier. The coverage information, a little more detail. This is where you can greatly assist, I think, your clients with kind of gathering, sorting, getting this information together. The offer of coverage code will need to be placed on line 14. That's these 1 series codes, and you're going to have to list or help your employers show what type of offer of coverage is being made to each employee. Not each employee individually, but as an employer to its employees, eligible employees, what offer of coverage is made. The lowest cost premium contribution, you're going to have to select a 2 series code for the 4980H safe harbor code. And then we kind of go back to the basics for each employee. We're going to need the name of the individual, the social, date of birth, if no social is available, and then the months of coverage, okay? So some additional information on 1095C, but I thought this would be kind of, again, a quick snapshot of really that coverage information that's needed and really when an employer is going to be required to comply under these particular items. So that was a lot of information, and as I look at my boiling hot cauldron, hot water here that's boiling, I see that something is coming together. Wait, it's not as clear right now. Oh, PrimePay ACA Compliance Navigator. All right. Steve, what's that? Well, that is our new solution here at PrimePay that can greatly assist your clients in relation to bringing all of this data together, to put it all in one place, allow the employer to be able to easily facilitate the FTE calculations as needed, perform their affordability analysis, as needed, maybe perform even what-if scenarios, but also handle that day-to-day or month-to-month measurement tracking of the variable hour employees. And we fully will be providing the 1095 forms, so furnishing those, the creating and furnishing of those to the employer for distribution to the employees. And we're going to be filing the 1094 B or C forms on behalf of our employers. And so this is a very comprehensive solution, a more dynamic solution than what PrimePay has rolled out before. And so look certainly for more details coming soon in relation to when that's going to be rolled out, when employers can begin to sign up, and so forth. So look for that soon. Communication will be coming out very soon in regard to that. There's a lot of content there. There have been some great questions. I'm going to look over those questions here and see if we can create an FAQ here for you that would be helpful, and we can distribute that out to our to our broker concierge partners. There is one question here that was asking about the Navigator, our new ACA compliance Navigator. Is that available on a freestanding basis or a standalone basis? And the answer is yes. We are providing it as a PrimePay payroll integrated solution where the data that's needed taken on the payroll side is automatically pushed into that solution, so saving that employer a tremendous amount of time. But we also are offering it on a complete standalone basis. You do not have to have payroll here at PrimePay in order to have that solution. So we want to thank you for attending. Hopefully you have found that this information is useful and practical here to you as you go and communicate this ultimately here to your clients. You guys are going to be extremely busy, not just with renewals, but also assisting and answering a lot of questions for your clients on this very important ACA requirement. One thing that I do want to point you to is to the right side there of that page. We are excited to be bringing a new broker portal to our benefit brokers. That is coming in November. Our next webinar will be showcasing our broker portal and just the great and awesome tools and resources that you will be able to have in your reach, at your disposal within that portal. And so look for more information to come on that, but look for our webinar to be touching on that here at the beginning of November. So with that, we will be providing a follow-up email with the recording link, and also if you're a Broker Concierge member of ours, a partner, we will get you the slide deck and also the FAQs if we had enough questions there. But can't thank you enough for your business so far here in 2015. We look forward to serving you and your clients' questions and needs and solutions here through the end of this year. Please feel free to reach out directly to our Broker Concierge team at 866-999-1139. We'd love to hear from you and address many of these important questions with you. All right. With that, that will conclude our webinar for today. Have an excellent day, and we look forward to talking to you here in the very near future. Have a good one.